So tell me about FSD.
Sure. So FSD was founded about 4 years ago with one intention in mind, to be the largest indoor legal cannabis grow operation in the world. It was founded by Thomas Verfel, the current CEO and chairman. I guess about 18 months ago, we started to become a little more active in this space. It did take a while. It took almost just over 3 years to get Health Canada's license, which did happen on lucky Friday, October the 13th of 2017. And after that, we proceeded to raise about $53 million in equity financing, straight shares, no warrants. And since then, we've been building. We built out 25,000 square feet. We made an announcement about a week and a half ago with our partner, Cannabis Wheaton, now Auxly, to build up the next 220,000 square feet. We have a strategic relationship in Montreal with another giant facility, much like our former craft plant, which is about 620,000 square feet in size. Our craft plant is approximately 630,000 square feet in size, with an additional 40 acres of expansion land, all of that property that shareholders of FSD own today.
There's a bit of a shift going on in the weed space. Of, the growing in great quantities is great and all, but that maybe there's more margin to be had in the what happens next to it. What are you guys doing on that front, if anything?
I would agree 100% that is accurate. This is a commodity, so at the end of the day, it's a race to zero, effectively. Mm-hmm. That's what it is, especially on the flower side. From the flower perspective, we look at it as indoor versus greenhouse or outdoor now, because, as of October 17th, there are some changes that are coming on the outdoor side. So I think on the flower side, and we've seen this in the recreational states in the U.S., where 1 pound of greenhouse versus 1 pound of indoor, even if it's the same strain done by the same growers, fetches a much different revenue per pound on the indoor. Building of those brands or those consumer packaged goods, are going to be where the margins will remain. Mm-hmm. Last I had checked, it's more than 20 million square feet of greenhouse expected to be built over the next 2.5 years. In Canada alone, that's a ton of greenhouse. Whereas, how much indoor is being built? I mean, the indoor is a much, much, much smaller amount, because it's a lot more costly at the end of the day. More costly to develop that infrastructure, especially if you want to be, in a location that's closer to one of the major Canadian city centers.
Mm-hmm. And so that pharma side, do you see it as being an indoor game?
Well, the pharma side is all about consistency at the end of the day. So from a flower perspective, absolutely. Because in Canada, with 4 seasons, you cannot repetitively grow identical flower every single cycle. So
you've got, we had a story out last couple of weeks ago about the share structure in the light of the MedMen debacle. Having a share structure that includes super voting is, a little bit hairy. You explained it to me as to you there was a reason to do this. What's that reason?
Sure. So look, if I was looking, from the outside, in the past, I would have thought the exact same way. Dual share structures, that's crazy, doesn't make sense. So here's, and this is what I wanted to clarify. Number one, this dual share structure was inherited. Ultimately, when going public, those Class A shares that contain the vote had to be turned into what they call super voting shares. And those super voting shares carry no dollar value. So it's not like, even if you have one Class A, which turned into something like 230,000 votes, those 230,000 votes isn't reflective of a value of 230,000 Class Bs. So in fact, the total dollar value that could be assigned is something minute, like $15,000 or something like that in total, right? So that structure, if someone was to look at it and say, oh my God, that one super voting share, Class A share, turns into 230,000 super voting shares, but it doesn't turn into 230,000 Class B shares. So from the perspective of what does it mean? It means that between myself, the founder, and the executive vice president, the three of us can make material decisions for the company literally, within an hour. And I think in this industry, because there are going to be a lot of mergers and acquisitions and very material transactions that are going to have to happen just for people to be able to survive, in this fast-paced industry. It allows us to move faster than any of them.
Understood right now, but, if that were the case, if you're looking at ways for us to build the company quickly right now while, we have to strike while the iron's hot and things are moving quickly, I can understand that. Why not put a sunset clause on that? Why not say that this is the case for the next year, 2 years, 3 years?
So that is, it's not so much that it's even a sunset clause. The reality is, if and when, and there's still some, debate, but, we finally saw the first, what I would call real institutional participation in financing in that last Canopy financing, right? The $500 million or $600 million investment. Mm-hmm. That was BMO led with institutions leading the way. Mm-hmm. That really has changed the dynamic, because before that, really, there was not a lot of true institutional participation. And really, the driver, and still the majority of the driver continues in the marketplace in cannabis to be the retail investor, right? I mean, and look, the average retail investor, in any microcap that they invest in, really, how much say do they have, right? It always goes to
they have very little say until they do, right? Until the wheels come off a little bit and they get together and with a few larger investors and exert their will. And we see that in proxy wars all the time, but that's still no reason to just sort of take it away from them. We very rarely require fire departments, but we want them there just in case.
I didn't create it that way.
You didn't admit it.
Yeah, and I'm not saying it's the right way to do it. I'm just saying that, once I got involved and I thought about it more, there are going to be cases here where, the reality is that, those super voting shares will have to dissipate, or there will have to be a change. That'll happen pending if the right acquisition comes along to acquire us. That would be, become something that would have to happen, I think. Or if the right institutions wanted to do a proper, legitimate financing where we, believe it is in the best interest of shareholders to undertake, I can't see that any legitimate institution will allow those super voting shares to remain. But, if you ask me, okay, put a blanket sunset clause, like this will be done within 2 years, I don't know if in 2 years that we're going to get that offer, that opportunity, or that acquisition within that 2-year period of time. And you wouldn't want to dilute this whole theory that we can act quickly in the best interest of shareholders, because look, we do have a very big float. I mean, just the float alone of Class Bs is 1.1 billion shares that are in the float free trading. And right now, when we started this, we had over 4,700 shareholders, the day before we went public. Now, I mean, if you look, we've almost traded 1 billion shares in less than 6 weeks, right?
Well, but you have a billion out.
Exactly, yeah.
1.3 billion out. Trading volume is a tough thing to crow about when you've got more shares out than anyone else.
Of course. But
your share price is moving up. To be fair, certainly when things started off, it was heading the other direction. Do you think that the super voting shares worked against you in the early stage?
I don't think so. I think, in the early stage, we saw the weak hands come out, right? Because when you look at the capitalization of the company, right, and the cap was a, original round when I got involved, which was 2 cents a share, a second round that was done at 5 cents a share, and we raised $13.7 million at that level. And at that level, there was a forward split enacted at that time of 1.33 shares. And then we ended up doing a 9-cent financing for about $37 million. Approximately. It might be a little bit more. But in the end, that whole total should add up to about $53 million in total. That was the entire amount. But in this case, I have, literally all of my family, all of my friends, and all of my clients in this deal. So I ended up deciding... And I am the single largest security holder of the company, today, currently. Me being an insider, I mean, people can see what I own and what I do You know, I think from the recreational market, it's going to be an exercise of branding, right? So
Sure.
the thing is, if you go into, you know, to buy booze, right? You go in there. Do you want to drink, you know, Grey Goose or Smirnoff? And you know, and it'll be dependent on that. Brand building still has the same challenges. You have to have quality and, most importantly, consistency, right? I mean, you know, we want to be sort of like a cannabis wonderland, right? Where you will have, you know, you're going to have your flower, but, you know, more than flower, and where the real margins will end up, you know, being determined is going to be in the vaporizers, edibles, beverage market, and nowhere better, you know, to make those edibles or beverages than a former craft plant.
Well, I mean, let's be devil's advocate here. Rifici was involved in a deal called Tweed back in the day that had a Hershey's plant that they took over. And memory serves, it was a bit of a rehab assignment getting that thing to the point where they could actually realistically use it. Old buildings come with a lot of old problems.
Yeah, and today it is the largest cannabis company by market cap in the world.
Yeah, but that facility is not what's fueling that.
You know, that facility is what started it off. And so, you know, these are fast-moving industries, but that is exactly how Tweed started. They took over the Hershey plant. You know, they
kicked out the rats.
And there's no question, there are problems. That's why we made Chuck our partner. Because he and Brad McNamee, who's their head engineer, right, both were at Tweed, started at Tweed. He's the co-founder of Tweed, right? And they, better than anybody, know from scratch, you know, there is a very big learning curve there. So we have the positive and the advantage here of utilizing their already existing knowledge in that learning curve to, you know, to convert an old food-grade facility into an indoor grow-op.
Talk about the Rifici deal, the Auxly deal. You know, there are those out there who think that the streaming option is a good one and it helps young companies get financed without necessarily diluting the stock. The other side of it says, well, that you're diluting future revenues. What attracted you to the streaming deal as a means of getting things up and running?
Sure. So you know, number one part of what I had mentioned, you know, Chuck and Brad are two people in this world, you know, that have the experience that not many other people have, you know, converting a old former food grade facility into a indoor cannabis grow operation. The streaming side of it, and, you know, just to clarify, you know, the 25,000 square feet that we're building, that we're operating, that we're currently growing in today is all FSD Pharma. The 200,000 square feet that construction begins this month, that is going to be part of that streaming deal. So that streaming deal comes with, number one, Cannabis Suite and Auxly has to finance the build. They have to construct it. They effectively give us a turnkey operation to come into. And I mean, their ability to construct, you know, they're involved in so many different deals. They have so much more experience, you know, as a team, you know, than we do, and then really than most other people do. You know, so they give us a turnkey solution to go into and operate under our FV Pharma license. You know, we then get all of our costs returned to us first, plus a margin of 10%. Okay. Mm-hmm. After that, it gets split. We keep 50.1% of whatever product is left after our costs and our 10% is granted to us. And then they get the other 49.9%. For the locations only that they construct, build, and give us a turnkey operation to, mm-hmm. you know, we get that split. But no matter what, you know, FSD Pharma, in the world of what is a commodity, and you know, ultimately will end up being like growing tomatoes or cucumbers, you know, we still are guaranteed a 10% margin no matter what.
Right. Assuming that the cost of cannabis goes to near zero, that's a great deal. If the cannabis prices hold up, which I'm guessing is what Auxly is betting on, then it becomes a good deal for them.
Well, and absolutely. Look, I mean, I think it's a good deal for both of us because, you know, when I first got involved and when I was thinking, I mean, who could build this project out? And Cannabis Wheaton are one of the few. And so, you know, and we ended up striking what we believe was a fair and equitable deal. You know, I think if it was left up to us alone to build this out, you know, we don't have we don't have that experience, quite frankly. So, we would be fraught with probably, incurring more mistakes, incurring more costs, taking more time. And to me, I think, because we are in a race in this industry, the advantages clearly overcome any potential costs in the future. But we as FSD Pharma do not have to go and raise any more money to build. In the industry, that's a big challenge. Because if you're going to go and you're committing to building, 2 million square feet of hybrid greenhouse, and you're committing $290 million to do that project, if the price of cannabis goes down, and ultimately if the price of cannabis goes down, the price of oil also will go down, reflexively, of course, right? The oil will also be a commodity like the flower is. So, if that ends up being the case, those capital costs and those spends end up being, not the right strategic investments. Whereas with FSD Pharma, I now don't have to go to market anytime. We have, I think as of June 30th, we have about $30 million in cash. We have about $10 million worth of early industry investments that we think will outperform in general. We own this entire property with zero debt. So our real assets in the company are there, and I don't have to go back to the market and raise more money today because I need that 220,000 square feet, as announced, has an expected budget of approximately $55 million. So if I was going to do that, if we were going to do that at FSD Pharma by ourselves, we have $30 million in cash today. It means that we would have to go back to the market to raise at least the other 25 plus, right? So that would put us at a disadvantage, especially if we go into a negative market, where either the money begins to dry up or stocks begin to go down in value.
So it's a hedge against the market basically eating itself.
Exactly. We're hedged both ways. And the beauty is, we sit, in a great asset position, right, where we don't have to spend it. So it just allows us to focus more on the, strategic investments and opportunities, to focus on.
But it also puts an emphasis on at the front end of your company, while putting a lot of elbow into growing weed, to find a way to make more money off the stuff that's left for you.
Exactly, and that's the beauty of it, because what's left, that 50.1% that's left for us after we've already generated 10% margin on the operation is zero. So guess what my flower, or guess what my oil is going to cost me? A lot less than buying it from anyone else in Canada. And then of course, you have this movement that's saying, why don't we go to like Colombia, to do the greenhouses and stuff? Absolutely. If you're going to grow greenhouse, you might as well do it in Colombia. You look at the rose market. The rose market tells you that. Why? Because on the equator, these things go straight up. The canopies go straight up. Your colas are much fatter. So, and that's all true, But there's a few realities when you think about that. Are they really going to be able to supply Canadians? Number one, there has not been one export license granted by the government of Colombia. Not one. Nobody can export anything out of Colombia at the moment and may not be able to do so. Number two, will the Canadian government allow this large-scale importation of cheap products, which would definitely just completely disintegrate our multi-billion-dollar industry that's been built in Canada? Look, I can't see that. So, I think we're going to be stuck in, kind of buying Canadian, at least for the next few years. And that, that buying Canadian, in our case, that 50.1% costs zero.
So, and I think you're right on this, that over the next couple of years, the agriculture side of marijuana in Canada is going to get squeezed and squeezed and squeezed tighter and tighter. That's going to put cannabis wheaton or Auxly in a bit of a situation going forward.
Well, look, I can't comment on cannabis wheaton and Auxly because I'm not management or on the board of directors of them.
But you're betting that they're making the wrong call, essentially.
No. We're not betting that they're making the wrong call.
Because you're going to benefit if the market swings the way that covering your costs becomes all important because the margins are squeezed. And then you're off to the races, exploiting your product for a higher margin. On the other side of that, Auxly is going to be struggling to repay its investment. The thing with these royalty deals is someone's a winner and someone is a loser. It's very rare that it's split right down the middle.
Well, which is true in any business relationship or agreement, no matter what. But, I think in the case of Auxly, number one, we did not have internally the people with the experience to build the craft plant out in a way that I would say was viable or legitimate, especially trying to pitch that to the investment community. So, with Chuck and Brad and Hugo there, that changed that whole aspect. So for us, having that relationship with them allowed, me to go out and raise $53 million straight equity, not one institution participating, right? And no warrants. So, and that was because people believe that Chuck and Hugo and Cannabis Wheaton do have that expertise and that knowledge and know-how, and it is true. They do. A lot better than pretty much everybody else. It's not only streaming that they're doing. They're involved in so many other areas. I mean, I'm pretty sure I saw, they had a deal with a beverage company and with Dixie Elixirs. And, I think Cannabis Wheaton's got a very, very wide sort of array of different businesses within the industry. So it's not like they're solely betting or investing in, streaming deals where they're only growing flowers being everything. I think they're pretty well diversified across the spectrum, across the industry. They're a lot more than just a cannabis flower streaming company.
If you were having your time over again, would you have done this deal exactly the way you've done it?
Yes.
Fair enough. I think that the thing that really sort of makes me concerned for a lot of the new weed companies, and right now there's a stampede of them, right? You could go back to 2014 and to find a time when more new pubcos are hitting the market in this space, but you'd have to go back that far. There's a lot of plans, and there's not a lot of buyers. Right, Emerald's going to build 1 million square feet and 4 million square feet, and Tweed's going to 8 million, and everybody's gone for their we're going to build this many million square feet. But when you get to what are you going to do with it when that's all producing and you're making slim margins on it? There's not a lot of business plans on that side.
Yeah. So
give me the FSD. Like we're different on that front.
100%. Well, number one, I would not build 1 square foot of greenhouse. I'll tell you that right away. And I'll tell you, before the whole theory was, how is the small guy going to compete with, the Canopies and the Auroras and the Aphrias of the world in the greenhouse space? They're not. Like, you're not, anyone that's going to build 200,000 square feet of greenhouse has no chance, to stamp those guys out. There's absolutely zero chance. For that reason alone, we wouldn't invest $1 in building a greenhouse. Now, what I think has really changed in my mind was, when that announcement came and C-45 was passed and there were these changes, if outdoor is allowed on a commercial scale, that kills the entire greenhouse market in Canada. Yeah. Why? Because look, you're going to go out one summer, grow the stuff for zero, literally, right? You're not then having to put the capital in to effectively get a similar quality, which is not going to be a flower that you'll be able to sell directly to consumers because you're not going to want to smoke the outdoor necessarily, but then you're going to just take that and convert it into oil. So, the oil that comes from the outdoor versus the oil that comes from the greenhouse, depending which method of extraction you're using, you can create the exact same oil. So, I would say, that outdoor decision, changes the game tremendously. That there would be nothing to me that would make me want to even consider spending $1 in capital to build any kind of greenhouse or hybrid greenhouse.
I tell you, what's interesting, I think, when I take a company and pick it apart and find all the things that the naysayers will say nay about, a lot of the time, guys will just stay quiet in the background and hope that it washes away. But you contacted me when I put out my piece that had a few fuck yous in it, and said, let's talk. I've got answers for you, and respect, man, you've got some answers.
And it's not that. I think, and it's a great thing. In fact, I want to see, people that are going to criticize us and tell us what we're doing wrong so that we can make sure that we do not the wrong thing, but do the right thing, right? Yeah. So for me, it's actually important to get feedback of what people are thinking. And look, sometimes it does take some clarification, and I would be the exact same way. I would say, that float, that's way too high. That's insane. That dual share structure, that's insane. And I think that would be human nature to any Canadian investor for sure, without even a doubt. So, and that is accurate, and that was correct, right? And so, but there is a sort of other sides to the rationale behind that, which I just wanted to make sure, at least, we were telling, the way that we saw it and what we were thinking of doing. But, I think there's no company is run perfectly. And unfortunately, in microcap world, most companies are run completely improperly or for the wrong reasons, and which is a detriment to the entire industry, for some of the, the really bad apples that end up sort of finding their way through the microcap space. But, I think, having criticisms is a necessity to maintain and ensure that we as management or on the board of microcap companies are looking at this and thinking about it, and also understanding that if we are doing something wrong or that there's something that we should be doing better at, that we do that, right? Yeah. And so, I want people to criticize. I want those criticisms just so that we can understand where people are coming from and to make sure that we are addressing everything, properly and accurately and doing, what the investment community wants us to do.
Yeah, for sure. I tell this to client companies and potential clients all the time is that if nobody says anything mean about you, then you're leaving that to the message boards and the short sellers. If nobody ever answers those questions, then you've given away the conversation. And it's one that a lot of companies learn the hard way. To just stay quiet and just stay above it all means actually being below it all.
For sure. And, because I've been involved in over 160 deals in the last 4 years in the microcap space in Canada, I hope that I've learned something along that way. And I'll take everything that I have learned, and everything that we still have to learn, I'm going to put it to our absolute best, in FSD Pharma, because like I said, I've got all of my family, all of my friends, and all my clients, and this for me, it's too huge to fail. So I have no choice, and I have to do what's best for everybody, and we have to do what's right. And I think we have, I think this is just such an amazing opportunity, where you see the end of a prohibition coming, and really too, our focus more than the recreational side, I think, is kind of the low hanging fruit for the next 3 years. Really is on the pharma side. The pharma side, I think, is going to be the most exciting frontier, over the next 5 to 10 years, which I'd love to be, a big part of in the future.
You get a lot of market guys that, have put 100 and something deals together and they'll come out with a company and say, oh, you know what, this is the big one. And then 4 months later, they're calling you up and saying, hey, well, I've got a bigger one. Is this your legacy piece? Is this the one you're going to cast everything else aside and devote yourself to?
So currently, because we're involved and we have certain engagements, but generally going forward, I guess Tom will tell us if this is the legacy piece. but in terms of my personal and family investment, this is our largest direct investment. I've invested over 7 figures cash into FSD Pharma. Personally, and my family, my friends and clients, we've raised about $53 million the last less than 18 months. So
it's a pretty big commitment.
It's a big commitment, and so that is First Republic's largest deal ever. So from that perspective, it is the largest deal, and I think there is a tremendous amount of potential and opportunity here, and in many ways, I'm on the hook to make it successful, because if I don't, I'm going to have a lot of unhappy family, which is not going to make, the holiday dinners, a pleasant experience ever again. The friends, they'll fall off and won't be getting called out to the bar ever again. Yeah, for me, it's too huge to fail. And so this is our largest deal. Will it be my legacy deal? Only time will tell.
Well, we've known each other for quite a while, and I've always found you to be a straight up dude. Credit where it's due, man. You've stood up and answered questions. I feel like got me back on the fence. Pulls off.
Well, and I thank you for respecting that I did reach out to you and giving me a shot at least to sort of provide my side of the rationale behind what has happened and why we did it. And and again, if there's ever any criticisms that I want to see them. I'd rather people tell us what we're doing wrong, because that's more important than doing the right thing. Is understand where you're going wrong.
I'll tell you, man, Rob Anderson just got a wash on Twitter from people who claimed he didn't have a heart attack, that he was fleeing to Panama to save on taxes.
Oh, geez. Yeah.
The market does not let up.
If someone does say something or write something about you, if it's inaccurate or untrue, or you have a different point of view, it's important to make sure that then get out there. Yeah.
All right, man. Well, look, I'll let you get on with your day. Thanks very much again. This has been great. And
thank you, Chris. Thanks.
Let's talk again soon.
Yeah. Thanks for having me discuss this with you, and again, respectfully and honorably, responding to me. That doesn't happen all the time. I appreciate that from your end as well.
All right.
Okay.
We'll talk soon. Take care.
Thanks, man. Thanks. Bye.